Hey everyone, it's Nick Jerusalem here with the Jerusalem's Happy Home team. Here to take a quick look at our 2020 housing forecast for the Puget Sound region. So, kind of taking a look at what should we expect for 2020. So, a couple kind of key things is one, we're already starting out the year with a very limited supply of inventory, which we'll take a look at. With that's coming very strong competition and demand, especially under the 500,000 price range. We're already seeing multiple offers and bidding wars coming back to the market right now, even through the holidays. And we have a very strong local economy and record low interest rates, which are kind of contributing to consumer confidence at the moment. So looking back over the last 6 years of supply and demand for King County, a couple just things to highlight here is that we're starting out the year near record low inventory levels. We haven't seen it this low in nearly 2 years. The big note is that in King County, our rate of sales at the end of the year in December was on par with where they were at the peak in the spring market. So we're already starting out at a very high rate of sales, likely to climb higher. Pierce County is a different story. Their inventory levels are at all-time lows right now. There were only 1,000 homes on the market at the end of the year. And if we look at their kind of rate of sales and absorption of inventory, we can see that they follow the same kind of cyclical trends that we've seen in King County. But the important thing to note is that all of last year, Pierce County actually had a higher rate of sales than King County, which that has never happened before. And that's something we're seeing being a big driver of the market last year was affordability. So kind of expanding on that is looking at what our region's growth will look like. So, we have four of the richest companies in the world are all on the West Coast, and two of them are headquartered here in the Seattle area. So Amazon and Microsoft. The other two richest companies are Google and Apple. And Apple just opened a new office and is going to have up to 4,000 employees up in the Seattle area. Google is expanding rapidly in the South Lake Union area. Other notable employers, you have the JBLM base down in the South End, and that's contributed to huge growth in Thurston and Pierce County. And then you also have UW is employing 47,000 people locally with lots of biotech investments and everything growing that as well. So we have some very rich, wealthy companies all in this area that are eyeing Seattle as their main area for the greatest amount of growth. The job outlook outside of just tech-specific companies, so you have a total of 134,000 jobs added in the Seattle, Tacoma, and Bellevue area. This is looking at the good old U.S. Bureau of Labor and Statistics. Record low unemployment right now of 2.9%. Other growth kind of happening in our area. So interesting note was that last year funding for startups was up 20% in the Seattle area from the previous year. And so we're seeing not just big companies coming to the area, but also smaller companies starting up here too. So they can steal kind of all the top talent from those big guys. And so that kind of ecosystem is really drawing a lot of attention and investment around the world. With that's also not just Seattle, they're starting to see more and more migration to the east side where things are a little bit more favorable to businesses. They don't have things like head tax threats and things like that we've been experiencing in Seattle. Vacancy rate on the east side is down to 3.6%, with rental rates went up 16% last year. Land prices have doubled in the last few years. Amazon has their HQ2 that they're kind of expanding over there in Bellevue. They, of course, were going to expand in New York and Virginia, abandoned the New York idea after things weren't working out. And with the space that they have in the pipeline for Bellevue, that would rival what their HQ2 would have been in New York City anyways. So other growth that's happening in the region. So in the south end here, we have areas like Renton, where still poised for lots of future growth and upside. Over 700,000 square feet of Class A office space that's going to be available there soon. Brand new high-end hotel. They're going to run water taxis from Lake Washington into South Lake Union, and things are still way undervalued. You can get a single-family house under 400,000 in the Renton area right now. Other South End developments is, you have a lot of industrial growth in the South End, kind of in the Kent Valley, going down towards Tacoma, Fife, Auburn, Puyallup. You have big companies like Blackstone, which is one of the largest independent investors in the country, just bought up 54 acres from Boeing in Kent this year. So when you have big investors like that eyeballing these areas, it's worth taking note. Mortgage updates. So I have to keep jumping my screen around here. So rates tumbled down 1% last year, and they're predicted to stay within the 4% range this year, currently hovering a little over 3.5%. It's an election year this year, so it's unlikely that the Fed will rock the boat much in terms of changing rates. And then with all the different trade wars with China and geopolitical events going on right now, it's had a lot of investors kind of making a flight to safety with mortgage US-backed treasuries and bonds, and that's helped to bring mortgage rates in line. Other mortgage updates is that conforming and FHA loan limits have increased from 726,000 up to 741,000. This is significant because for these two different types of loans, you only need up to 5% down, which means you don't have to come up with 20% down payment for a jumbo loan or things like that. Also on the down payment terms, VA loans, Veterans Administration, they just this year came out with no longer having a maximum loan amount where you need a down payment. So they never had a true maximum loan amount before, but after a certain point, you'd have to come up with money down. Now you could buy a $5 million house with a zero down VA loan if you had served previously in the military forces. But there's no longer that requirement on when you need to start bringing in money down. You do have to qualify for the payments, of course, but it'll be interesting to see what updates that does. The rental market recap. So this is kind of looking at the various different submarkets in our greater Puget Sound area. You can see that a lot of the south end areas, Kent, Puyallup, Tacoma, Tukwila, areas that had more room for upside because the rents weren't sky high yet, also saw the greatest amount of rental increase over the last year. And kind of looking beyond 2020 and sort of kind of what we're going to see here. This is a map showing a heat map of concentration of renters. But the interesting thing to see is how the competing demographics are going to clash with one another into the years ahead, and specifically millennials and baby boomers. So you have over the last decade, 3 out of 4 new arrivals to the Seattle area have been folks under the age of 40, oftentimes not able in a position to buy a home yet, especially given the high prices. So that's driven them out to either renting in the core or buying in the suburban areas. You also have the rapidly increasing retirement age population in the area. And so both locally and from out of state, you have a lot of migration from areas like California, where 40% of existing homeowners are saying they're going to sell or move out of state once they sell. So areas like Washington, you have no state unemployment or state employment tax. Weather's not quite as nice, but it's the third most popular destination for relocation behind Nevada and Arizona for California residents, that is. So, and then also with folks retiring, they often don't have to be so close to the urban core, so they can move out to the more suburban markets. And that's where we're going to start seeing them kind of butt heads with the folks that are going to those suburban markets due to affordability. And so it'll be interesting to see how that plays out into the future as well. So as you can see, things are very different for 2020, depending on whether you're selling, buying, renting, or investing. We definitely have tools and strategies in place to help you succeed with any one of those goals. So just feel free to get in touch. We'd be happy to help any way we can. And of course, you can always visit us online at happyhometeam.com.